Hey everyone, welcome back to Invest in a Moment. I'm your host BT, and today we'll be talking about the AI frenzy and how it's impacting the financial world at the moment. With me are two very special guests. We have Felix Neoh and Simon Chong with me right here.
Hi,
Hi.
Maybe you guys can introduce yourselves a bit. Simon, you want to kick us off?
I'm Simon. I'm the Chief Business Officer of GaxMD, who is also the company behind MYTHEO.
Hi, my name is Felix, and I'm the Director of Financial Planning at Finwealth Management. We are a licensed financial planning.
Before we get into today's main chunk of topics, I kind of want to give an icebreaker or warm-up question for everybody to maybe talk about, right? So let me kick things off because today's topic is AI. But before going to technical things, I want to ask, how has AI impacted your lives so far? Or do you find yourself using more AI-based solutions in your everyday lives? It could be anything from ChatGPT to stuff on your phone or even your home appliances, whatever that may be. Simon, do you want to kick us off and share a little bit?
Yeah, so I think AI has been a great tool for me. I've been using ChatGPT to search for information and to put together certain conversation. Also to use ChatGPT to analyze performances of the investment market and also the consequences, of certain market events. So I think it has been very, very helpful. Definitely has helped to put together a more structured presentation as well. And also it can help to predict, like what is expected, to sort of like happen. And it helped me to make unbiased decision as well at the end of the day. It's very important tool for us.
Non-emotional. No emotions.
Less emotional.
Felix, what about you?
I hate to admit that I'm actually a laggard when it comes to this. I wouldn't say that I'm an active user. Sometimes I find it a little bit annoying when AI is trying to predict what I'm trying to type. Nowadays, with the Copilot and what have you, right? So I would say that I am not an active AI user, although I do recognize some of my other colleagues are a little bit more active in terms of the usage. And that actually is helpful for me. Why? Because like just before I came today, I was asked to vet some scripts for a video take that my company guys in my company are actually doing, and the beauty of this is, wow, everybody's English is so good, so it's so easy to go and vet, right? You get hardly any amendments to make and what have you. I didn't quite ask, but I'm pretty sure that AI had some kind of a role in that sense.
Okay, so it's more, but AI seems to automate or rather make it much easier.
Yeah,
I think.
seems so. Yes.
Yeah.
Well, then talking about that, since you said you were a laggard, right? Let's say you weren't in your current field or industry of experience right now, maybe you could also share your thoughts. If you didn't know what you knew about AI right now, how would you feel about it?
I think for me, I would say that anything that is going to help me be more productive, to save time, to be more efficient, and to have a better outcome, is something that I don't mind exploring further. I'm personally not very skeptical, or I won't question. What are they doing with my data? Are they encroaching to my personal space and all that? I tend not to think too much in that sense. But obviously, I make sure that I don't put personal data into any kind of open kind of architecture or areas, like I would say. So for me, I can only say that I should get on the bandwagon soon.
What do you think, Simon?
Yeah, I think if I'm not in the industry, I would probably think AI could be a threat,
Okay,
right? Could be a
interesting.
threat. Because I mean, like how we have been targeted, right, with all the campaigns, all the scams. So I think AI will probably take this to the next level, right? I mean, the scammer will become smarter. So, well, probably I would just focus more on the bad side of it instead of the good side of it. So, yeah.
I guess, Simon, you're right in the sense that there are pros and cons, but it also depends on your execution of it and
Yes.
how you take it at face value or how you apply it. I think application is can be important as well.
That's right.
One more thing before we jump in, on a more positive note, right? Outside of your data, outside of your privacy or ads, right? Do you think that AI is currently contributing in a positive manner? The future of AI, how would it contribute to various markets outside of finance? Like, where do you think it can bring more value? Yeah, what do you guys think?
Well, I think there is a risk of people passing off AI derived kind of output as their own, right? So I think I would need to be a little bit more critical or skeptical in terms of what I see as people saying that this is mine. I wonder whether it really is, and I think this is where that recognition of the source or quoting who the source of the documents are, comes in very very handy, or something that you want to pay attention to, I would say. So don't think that the person who's giving you the output, or anything, any kind of report or anything like that, that is his own or her own knowledge or whatever, but likely that it has actually come from elsewhere, right? So it might be a good or bad thing, but just recognize, because very often we might evaluate a person based on what we read, what the person had written or whatever. Now you have to be a little bit more skeptical, I suppose.
I think on the other side is I think AI would take the mankind to the next level.
Okay.
Yeah, because now we have another kind of intelligent tool, right, on our side that can actually help us to uncover our potential, right? So to make it even more smarter than what we used to be. So I believe that we are going to see a lot more bigger things in probably distant future with the help of AI. We are probably able to create something much more bigger, faster, and much more impactful for the society.
Like Robotech?
Yeah, like Robotech,
Terminator.
quantum computing. Oh yeah,
No.
like man and machine. Yeah.
Okay, cool. So thanks for sharing those initial thoughts. As we go into the first sort of topic that I want to discuss is that the AI stock boom right now, hype versus reality. Do you think that this is sort of investors who are chasing trends? Maybe they feel FOMO, or from a more practical standpoint, is it backed by data, or is it backed by any sort of analysis? Simon, you want to just kick us off and see?
Yeah, so my answer is no. I don't think AI is a fad. In fact, AI is the next big thing, right? If we were to look at, the current uptrend in the stock market, the AI stocks, well, a lot of people may associate that with the dot-com crisis, right? The pace of rise. So, but I think there are a few key differences compared to back then. Well, if we look at the valuation today, there are few companies that are maybe a bit overvalued, but in general, the valuation that we are seeing today on the AI stocks, they are still like much cheaper than the dot-com crisis, those internet-based company. And secondly, if we were to look at the investor sentiment back then, if we compare with 2024 in terms of the fund flow, investors are pretty much hesitant. They are still cautious, or they have become wiser, right, in terms of putting in the money to hype, to those hype areas. So they need to look at, they are looking at fundamental. They are looking at whether the company have solid growth model, competitive edge before they start investing. And therefore, the fund flow into equity last year was pretty much half of the volume that we have seen during the peak of the dot-com crisis. So I don't think that in terms of investor sentiment, people are rushing into the AI stocks. We are talking about AI giants, right? And they are giants, right? Today, they are profitable companies. So they have strong resources. And I think they are trying to make it a real-world application. Yeah, so it's very different, right? This company, they want to take AI to the next level with whatever that they already have. Yeah, so and I think lastly, perhaps we can look at the pace of IPO. The pace of IPO has been quite slow versus back then. And the companies that were listed through IPO, they are much more established. So therefore, these are the few reasons I think it's not a fad or a bubble. Perhaps it's a correction, which any type of new technology trend would have gone through, a pace of hype, correction, and then stabilization.
So like a cycle.
Like a cycle, yes.
Felix, what do you think?
Yeah, AI is definitely here to stay, right? And the next question is, what is the maximum that we can gain from the current iteration before it goes to the next iteration, right? Because it is definitely going to go to the next level, and the next level, and the next level, right? So is it a fad? Definitely not, I would say. But does it mean that any company who has an AI word to the name of the company, does it mean that just because you have AI, therefore you're going to make money? Questionable, right? And I agree with what Simon said, that if you look at valuations, in actual fact, you don't even have to go back to the dot-com bubble. If you look at valuations of some of the ETF, the AI ETFs, tech ETFs, in actual fact, the valuation is not too high. There definitely are some particular AI stocks that may have actually, rode ahead, if you like, right, of their valuations, and investors are actually perhaps giving too much credit, in terms of their expectations, right? The price to earning ratios are probably frothy, if you like, right? So therefore, making investment in AI companies a little bit more challenging, if you like, or I would say you need to be a little bit more. You need to scrutinize things a little bit more, right? Don't just buy just because it has AI in its name.
I like what you said about, like you said, just because the name has an AI label to it doesn't mean that it's backed by any form of data or justifiable performance. So maybe just I want to dive a little bit into terms of valuation versus innovation, right? Like you said, if someone in the AI space somehow hits a gold mine, their technology somehow booms, right? And other companies who follow suit doesn't necessarily mean that it can be the same performance, right? So how do you think that is justified in terms of valuation versus innovation? Is it backed by, hey, we've done all this testing, let's say, and we've proven that this sort of works? From an investment standpoint, if I'm coming to you from a valuation standpoint saying, hey, look at my solution, it's backed by AI, these are my forecasted performances. But as an investor, how do you think, what thought process would you go through when someone tells you that?
For me, I would say that your technology might be great, but the question becomes: is it something that people will adopt? Is it something that, as a company, as a business, is it easy to monetize? Can I really see that benefit immediately? Will people adopt immediately? So I think one of the things that we do need to recognize is this type of technology developments do not exist in a vacuum, right? You come up with something that is so great, but perhaps you might have come up with something that's a few years, before time. And if you actually go back to history, you will see that there are a lot of companies who have actually done that. They were a little bit ahead of their time, and the market were not ready at that point in time yet, right? So if you buy at that point in time and there is a hype, right, therefore the valuations might be pricey, and the valuations and the expectations does not translate to profitability. And that is where you will find that there might be that kind of a correction. And obviously, the higher you go, the harder you might fall as a result of that. So I think this is where the expectations versus reality will really, need to see how things really does go.
Okay. Simon, any thoughts?
Yeah, I agree. I think, sometimes valuation can be ahead of time, right? Currently, I think if we were to examine the individual, like AI companies, the leaders, right? Some of them are very expensive, like AMD. I think AMD is extremely expensive. That actually means that investor is expecting insane growth from this company, right? If you were to look at like who are the other chip maker out there, it's Nvidia, right? So AMD probably is the only underdog, right, out there that can challenge AMD, and therefore the hopes are there that this can happen. Besides that, I think if you look at like company like Microsoft today, I think they are big, they are established, and therefore there has been a bit of premium that people pay, to acquire this company. I mean, to hold this company. In terms of the Microsoft, I think we all know ChatGPT, right? They are bestie, so called, right? They have been using AI across all their verticals. So I think that is very impressive. All this thing can actually translate to a lot more productivity to the company. So the potential is there, but how do they monetize it? How do they make sure the adoption continue to increase? That's another question, right? So so I think valuation is quite different across different type of AI related companies. We can also consider those material, company that supply the chip maker as well, right? So they are also part of the AI chain. So they could be cheaper as well today, but they are probably in a more neutral position to basically benefit from the AI tech competition that is happening between all the chip makers or the software makers, right? So there are a lot of areas that we can play AI. Some are expensive, some are cheap, but I think each area have their own benefit in the value chain. We just have to be able to figure out which one hasn't gone ahead of time, right, in order for us to be able to reap the benefit.
Yeah, I just want to chime in a little bit in terms of the environment or the value chain, if you like, of AI. So again, there's hardware, there's infrastructure, there's applications, right? And you have various companies in all those segments, if you like, of this value chain. And when we talk about expensive, which part of the value chain is expensive, which part isn't, So there creates or there exists opportunities, right, within this space, but doesn't mean that everything is equal or all opportunities are equal in that sense.
Oh, okay.
Yep.
Well, I'm glad you mentioned all these big names. You mentioned Nvidia, mentioned Microsoft, and this whole AI sort of process where there's various chains of different people holding different types of market share, right? So looking at, let's say, a product such as ChatGPT, and now China has come up with DeepSeek, right? With all this, obviously encourages more competition in this space, and as competition intensifies, what do you think this means for investors globally? Like how do you think that affects the overall market with people like Nvidia dominating a major chunk of this market, or Microsoft, or the next player, or players like AMD who people may be iffy about? Because I feel that a lot of the investors' sentiment is tied to a brand name first rather than the actual solution. Because obviously the brand name is backed by performance data over the years, and AI is a relatively new space.
Yep.
Right? So how do you think investors would feel about this?
I think competition is good because if you were to look at the pie, it's getting bigger, right? So obviously competition will come in sooner or later. So to investor, it is a good opportunity for them to evaluate the company in terms of whether they have the competitive edge, right, in costing, in terms of the application. So with competition also, it makes the pricing more healthier and probably more sustainable as well over long run. So business can basically innovate and basically can ensure they can stay ahead of competition better as well. So I think it's good for the market, good for consumer, but obviously only the good ones will stay, right? At the end of the day, winner will take all, consider, right?
I think again, perhaps I might show my age by saying this. For those of you who are familiar, who've ever had, those cassette recorders or video. This one, so VHS versus Betamax, if you know that, right? So at one point in time, I still remember when I was very young. You go to some friend's house, they had a Betamax player. You go to other places, you have a VHS player. So the question is, which technology would prevail? And in that case, it was VHS, right? Then, so now the question becomes, which technology will prevail moving forward, right? Among all the AI that we have seen, and I think it is perhaps still a little early, but like what Simon was saying, the pie is actually growing. So it may not mean, I do not know whether it's a winner takes all kind of a situation as you mentioned, or the pie is large enough that you would still have sufficient followers, if you like, of either this one. So I would say that puts the question back to the investor on which bet do you want to take, right? Where do you put your eggs in this type of an environment where things are not really settled, right? Everything is new, everything looks great, everything looks fine. Valuations are crazy, may or may not have fulfilled in terms of the earnings potential. So which one do you want to go for, right? So I think that is the question that we should ask. Not so much whether or not we should invest in technology or AI. I think the answer is a definite yes, right? The only question is which one, and then the question becomes: do you really want to bet on one versus the other, or do you want to buy the market in that sense?
I think as an investor, you're not loyal to any one of these companies or solutions or any of these. You're looking at one from a practical standpoint, which one will give me the best return as an investor, sure. But also some people may go with feeling like, oh, Nvidia, solid. Even though I think at one point they had some chip crash or something along those lines, but people still back it. I think I read just today, Nvidia's rallying up again in terms of their stock. So I think you're right in the sense that innovation is what drives competition, I feel, and that competition is healthy for now because it then motivates others to sort of either chase up to whoever's at top or have the motivation to sort of leapfrog ahead of all other competition. So maybe we'll roll on to the second sort of topic and we want to discuss today in terms of market volatility. Right now, in terms of concentration, tech-heavy indexes are currently being dominated by AI stocks. Do you think that investors, as Felix mentioned just now, do you think that we may seem that we're putting too many eggs in one basket? Or how will that change across time based on maybe trends or different performances?
Yeah, we are quite concentrated now with the Max 7. Well, this, of course, are big companies, profitable companies. They could be two approach. One is through the leaders and the other one is through the smaller companies. Smaller companies tend to have more innovation and growth, while the big leaders, they tend to bring in the stability and assurance. But without the big guys, you won't have the small guys also, right? Like pretty much Microsoft and Nvidia, basically they're carrying the AI on their back. So if any one of them has any issue, then the repercussion will be huge to the entire AI industry.
Circle of life.
Yeah.
That's right.
Yeah. I would say that it depends. It depends on how one invests. right? If you are basically just listening to the sound bites, whatever that you might flip your newspaper or the website, your news sites, right? And then if you see the name, then you get that familiarity. Otherwise, then you don't. I think if you are one of those, then you might be a little over invested in certain names rather than others, right? So I think there is that potential of risk, in being over concentrated in certain, and this is where I think the way or the approach of investing in this emerging segment, if you like, is very important.
Saying that when people look at news, like I say, if I were have zero fundamentals and looking through news, I say, wow, Nvidia,
Yep.
great, I buy today. But next day it crashed, and that's exactly what happened, right? People were saying, oh, buy Nvidia now, buy the dip, double up on your stock, on your investments, right? But that just shows how volatile it can be. Let's maybe pivot to sort of emotional investing. If I'm seeing all these websites, all my friends are talking about it, all the sites are talking about it, buy Nvidia, I'm like, okay, buy. But the next day, I'm like, oh no, it's dipped. What do I do now? So, do you think that this sort of emotional investing is, I guess, what impact does it have long term, or do you think people are sort of just, I'll just follow whatever the trend goes? As an investor, like, how do you think that will impact on their investments?
I mean, okay lah, nothing so fancy. Just look back a couple of years and talk about glove stocks during the height of COVID, right? The number of people who actually went in towards the tail end of the height of glove stocks is like almost everyone like that right? Quite a number of my clients were actually also in that kind of a scenario. Even though I said, "Are you sure?" Right, but they still go in simply because this is human nature, right? So I think this is where we need to rein in terms of our investing strategy lah, right? Where we need to actually have a more structured approach for investing. If you like, play it safe with your serious money, and then yes, a little bit of money that you set aside that is actually meant for play, for things like this, a little bit of FOMO, a little bit of here, there, hearsay, here and there, and what have you. I think it's all right, but recognize that you need to be attentive, right? Pay attention. Since you are the one who's making a decision on what to invest in, then you better know when is the right time to get out or switch, right, as well.
Yeah, I agree with Philip. I think most people would invest in that manner. As a new investor, well, it's tempting to follow the crowd, right? And to basically invest in something that you are familiar with, or you tend to heard before. But investment world is big. The idea is that the risks are real. So once you hurt yourself, then it could be bad lah in terms of the future, right? How it impact your investment behavior. It's best to basically use a systematic way, like what Felix said, has a structured way to invest. It's good to engage proper financial planner or investment advisor to do it. How to have the diversification and how to stay invested, or I would say like keep an eye of the market. It's important to look at long term. Yeah.
Looking at all this, we're talking about individual AI stocks. What happens when it's bundled into ETFs? Like with an AI ETF, for example, do you think it would be safer to invest in an ETF that includes an AI stock, or a full ETF with all AI, or make sure, or however you want to diversify the sort of ETF, right? And also, as an investor, maybe in your experience, you've seen, would they look at thematic ETFs? So I'm more likely to invest in a bundle of ETFs that has an AI stock, versus something that is purely AI, or something who no AI at all. Maybe from Felix, your experience, you can share how people look at these different bundles of ETFs.
Yeah, I think the way to consider this question is more of strategic investment versus a tactical kind of an investment. Strategic investment, what we mean, when we talk about that, is that these are the all-weather, doesn't matter what's going on in the market, I'm going to be in this type of allocation, I'm going to be in this kind of investment, right? Whereas tactical, basically, okay lah, I read the newspaper, I see some trend that is coming, right? I want to pick and ride the wave of this trend before it matures and all that. Those are a little bit more tactical in nature. So it depends on how you look at this AI, right? AI, in actual fact, some of my clients are like so they might be wondering, wow, I really need to ride this wave. And I'm telling them, like, what are you talking about? You are already riding the wave. You are on the wave. Why? Because if you are investing in, for example, the S&P 500, you are definitely on the wave, right? Simply because AI stocks, tech stocks, they already comprise a big chunk of the S&P 500 already, right? So don't feel that you need to add anything more unless, a portion of your asset allocation you feel, I feel very strongly about this. I want to put a little bit more, right? Because I feel that the tide is still high in that sense. So then you can add a little bit of, tactical allocations to those. I would say that you need to have this so-called strategic and tactical approach to investing. Then at least, you won't find yourself in either one only.
Totally agree with what Felix said. The strategic and the satellite, the strategic part is where you need to have the broad exposure. So for satellite, you can be a bit more specific into those, maybe those sectorial kind of ETF. But the risks are very different, right? If you're talking about the more concentrated sector kind of ETF, they purely invest in certain group of company like AI related companies, right? So the swing can be very I would say volatile. So it's during those volatile period is whether you can take it or not, right? So investment is not really about a sprint, So we are not rushing to finish soon because there are a long way to go. So it's a marathon. So you need to be able to withstand the shock in between, and therefore having the comfort of a stable core portfolio that will give you that at least some form of like certainty that you're not badly impacted, right? Then you have more room to further maybe deploy the asset, to take advantage or to even stay invested longer. Yeah.
Oh, I'm glad you mentioned a marathon. Like I said, investment is not really a short-term sprint.
Yeah.
It's a long-term marathon, right? And I want to link back to MYTHEO in terms of portfolio rebalancing. So how does sort of MYTHEO mitigate this risk and maybe reduce volatility through portfolio rebalancing, be it in your ETF bundles, different individual stocks, or how does that process, or what's that sort of mentality behind that?
It's actually quite straightforward. Actually, we use ETF to construct the portfolio. So this ETF are well diversified across different regions, different country, different sector, and even orientation. Like the AI stock, they are pretty much in the growth sector. So in our portfolio, we don't just invest in growth. We also balance the growth exposure with value, and we have mid cap to large cap sector. So that will help to capitalize on different AI segment, right? The large company and the smaller and upcoming with innovation type of companies. We also have diversified. We also diversified across multiple asset classes. We were to look at last few weeks, right, when AI stock were to correct. The asset class that has done well is not mainly a surprise, but is something that has been working during bad times, right? Like gold, right? So do have some exposure into other asset classes besides just equity. So that helps to cushions the volatility from each asset. And also we do rebalancing on a regular basis, so that will limit the exposure, right, into the asset class so that we don't overshoot, in terms of the risk for investor. And besides that, we have our proprietary AI assist algorithm that constantly monitor the market sentiment and the market data, and we'll basically do the adjustment when necessary to basically reduce the downside risk. So a combination of ETF, diversified asset allocation, and also AI tools that do monitoring to further reduce the risk of the portfolio.
Okay, is that the same for you as well?
Yeah, definitely. Our approach to investing basically is, that you have to be invested in a diversified portfolio. And you look at one of the things that we help our customers do as a licensed financial planner is look at the strategic asset allocation of their investments. So what we are saying here is that you need to have a combination of low risk, moderate risk, and high risk assets, right? And they can comprise of as simple as your bank account. Yes, that's part of your strategic asset allocation. Your EPF, you can't touch, right? So that is also part of strategic asset allocation. But then, you have some people, they might have direct stocks, maybe it's company shares or whatever that might be. So you have direct stocks, and then you have, contributions through either ETFs or unit trusts or any other collective investment schemes, right? all of those need to be so-called bucketed in the low risk, moderate risk, and high risk space, depending on your risk profile, right? So that way, when the markets are up, you're benefiting. Markets are down, you're not too bad in that sense, right? So that is something that we actually work very closely with our customers and supported by fund managers such as MYTHEO in that sense when it comes to the actual investing.
So moving on, let's talk about long-term investing and how how investors can be exposed to AI, maybe without the stress. As investors, AI side, there's passive versus active investing. We can kick off with maybe how MyTheo incorporates AI-related stocks into its portfolios while also managing risks versus different investment behaviors.
So as I mentioned just now, we invest through ETF. So we don't invest in single AI stock specific. Instead, we use ETF because it can help to spread the exposure and the risk to more companies. So for example, we invest in AI stock via this ETF called Investco Nasdaq 100 ETF. So this ETF itself has about 45% exposure into the Max 7 stocks. Besides that, we have about 10% exposure in iShare Russell Mid Cap ETF. So this provide exposure to the up and coming, the smaller mid cap companies like Palantir and also AppLovin. Yeah. So it has exposure to the large and the smaller companies as well. We have our AI Assist, like I mentioned, that monitor the ETF in terms of the risk of downturn. So this can give a good exposure and also a diversified exposure to AI related stock and also to participate into the growth of the AI industry.
Okay. And things, what do you think the best strategy behind this could be? Versus, as I mentioned, with passive or active. I'm sure you have investors who are both.
Yeah. I think that is our approach, when it comes to helping our customers with investments and all that. We take a view that we try to help our customers so-called grow their net worth, right? Grow their financial resources so that they are able to meet their financial goals. So we always start with the financial goals first. What is the financial goal that you have? How much do you need? When do you need it, right? Because that will also determine how much risk you can afford to take, right? Then from there, we try and build investment portfolios, and it does comprise of both active as well as passively managed investments. Why? Because in some markets, in some strategies, an active approach might work a little bit better compared to a passive, right? In some other strategies, a passive might work better and it's going to be much more cost efficient and what have you, right? So in that sense, I would say that from our standpoint, a combination of active and passive still does make sense for many customers at this juncture. What the fund manager does, I don't have to repeat, right? Because Simon has already shared that. But for us, it's really about helping to keep customers emotionally focused on their goals. What do I mean by that? Simply because when markets are good, sometimes their emotions get the better of them. They want to put more. They want to do a lot of things that may not be in their best interest for their long-term goal. Likewise, when the markets are down, they might want to cash out, right? So cashing out, from a paper loss to a realized loss, right? Is that the best thing for the customer? And what do you do when you realize the loss, right? Are you going to come back into the market? Or are you going to then change to a low risk? Or I'm going to sell out, I'm going to put FD. Oh my goodness. If you are down 50% already, you sell out and you want to put in FD, can you really recoup that loss that you made? Wow, it's going to take a lot of work, right? So we actually come in from the managing of emotions point of view as well to help customers. You remind them, very odd. You would have thought that people will remember, but human nature is such that sometimes they just need assurance, right? They just need that kind of hand holding, if you like. So I think that is where as licensed financial planner, we are able to play that kind of a role, and we complement the role of the fund manager, right? Fund manager's job is basically to do the investment, get the best out of returns, risk adjusted returns, I would say, right? So you're making sure that you don't take too much risk, but get a kind of fairly decent type of returns for a customer. And for us, is about paying attention to the financial goals that the customers might have, right? And making sure that customers, stick to their long-term strategies, right? So that they will be able to achieve their goals.
Okay, I see a lot of synergies there in terms of what you mentioned, both sort of separate functions, but both work in unison together But when it comes to overexposure, how does that sort of play into your maybe long-term strategy? If I'm saying I want to invest in, as we talked about, the AI ecosystem, you have chips, you have systems, you have solutions, you could have robotics, cloud software, all these are all AI backed, right? So with a portfolio or an ETF bundle of all these different sort of services, right? How do you mitigate maybe the chance of being overexposed in just one sort of field or landscape?
To us, AI is exciting. Well, AI is transforming various industry, right, from healthcare to transportation to consumers services. But the risk that comes with it is also very high. So AI is exciting, but it's not everything. We build a portfolio that provide exposure to the growth segment of the market. To prevent overexposure, we balance it with the other growth industry, and besides that, we also have other type of asset classes as well, like I mentioned just now. Yeah. So with the AI tools that we have, also rebalancing, so that helps to further reduce the maybe like potential downside. Let's say due to sentiment or due to certain kind of like concentration.
The financial planning perspective of things, this is where the holistic view of one's finances is important. So earlier on, I alluded to the fact that we look at the strategic asset allocation of the investor, and that's very important because otherwise, if the client is actually accessing different products from different providers, then he is so-called the guy in the middle, right? In the sense that he is the one who's in control of everything. But if he doesn't have a holistic view of things, then he might not even realize that he's overexposed to certain sectors or certain industries. So this is where we come in, right? Where we try and understand where our customers are investing today, right? Are they in the moderate risk space? Are they in the high risk space? What is the percentage that they have in the high risk space? They might say, oh no, I don't think I have a lot. But in actual fact, when you start adding things, right? Oh, my exposure to, the AI stocks, or my exposure to some growth funds and what have you, when you add them up, is it too much based on your risk profile, or is it insufficient, right? Based on the expected returns for those type of asset classes, are you able to, achieve a decent potential investment return to be able to achieve your financial goals? Or if you can't, that means that, you actually have to save more, right? Because you either save more to be able to meet your financial goals, or you save less but you have a higher ROI to be able to help you to achieve the financial goals. So I think to echo what Simon is saying is that fund manager will do what they need to do, right, when it comes to managing risk and all that. But really, for us, the holistic view of one's financial resources or a situation is very important, and that is something that not that many people have, right? So that is something that one should pay attention to.
As we wrap up this episode, let's talk about more actionable advice, right? So I'm going to throw a question to both of you, and I want to know your thoughts. What do you think are some red flags you would see if an investor came to you and says, "Hey, I heard about this great AI investment. Let's look into it." What do you think? What immediate red flags will sort of ping in your mind when you see this?
I think I will ask further. Why do you think so? There must be something, right? Then I would try and understand what else that he's investing in, what are the options that he's looking at, and perhaps I will also try and share with him the outlook. Yeah, so by understanding them, then perhaps we can able to provide something of a better option for them to select. Yeah.
For me, I would say that it does happen. We do have clients who come in and basically they say, hey, I want to buy this or have a lot of this, right? Then or I want to get this, right? So then our role is actually not so much of agreeing, because we are not just the broker who just executes, right? You want something, I give you, whatever it is. Our role is always to try and play the devil's advocate and to ask the why. And the objective really is for a customer to have a more balanced view, so-called two sides of the coin, if you like, so that when they make a decision, they are making it with the eyes wide open. So if they say that you want to hold on to something, right, we'll ask why. Right? What is attracting you to that particular stock or that kind of investment, that kind of a strategy? What do you know about it? What kind of expectation do you have on that kind of a sector or that kind of a company, right? And how does that company compare with others, right? So-called looking for the best of breed. Sometimes they do not even understand this type of a concept. I want to buy an AI stock, right? Then I heard again. I went to the market. I went for a cup of coffee, and I overheard the next table. They were talking about this. Simon was in the next table. He was talking to someone else. About this particular stock, and I kind of got wind of that name, and I want to invest as well, right? Because I heard so many exciting things about it. What we need to try and do is to help our customer understand their why, right? What is attracting, and more importantly, a lot of people, they think that when it comes to investing, I just have to choose the right stock. But the truth of the matter is there is more to it than investing. You and I can actually buy the same stock, right? But our return potential, or the actual returns could be very different, simply because I might be doing certain things, while holding the stock over a same period of time. Whereas you might be just, a sleeping investor, if you like. You just buy, and then you chuck it away. You don't even look at the statement. Something happens, you don't really care. You don't do anything. You don't take profit. You don't reinvest the profit. You don't, restructure, change to another AI stock or whatever. 3 years later, when we look at our investment statements, we will have very different kind of outcomes, right? So when we go into this type of investments, when we talk to them about investing, we really want them to up their so-called game when it comes to investing. So what it means is we create the awareness that if you want to succeed in investments, right, there are certain things you need to do. Are you prepared to do this on your own? Right? If you're going to do this on your own, then you make sure that you do all of this, right? Otherwise, then what we say is, why don't you work with a partner? Why don't you work with a fund manager? Why don't you work with people like MYTHEO? Right? Simply because your 1,000 that goes in, your 10,000 that goes in, right, gets co-mingled, right, with another 10,000 from someone else, another 20,000 from somebody else. So when you actually look at the collective amount that's being managed, it's a much sizable or larger pool of funds that the fund manager is then in a position to employ professionals whose full-time job is to look at this rather than yours, right? You have to do your own work. You have family commitments and what have you, right? You don't really have time. Occasionally you start thinking about this, and then you figure out, what should I do, right? But in actual fact, you might be late, right? Whereas, a full-time professional doing this will probably have a better handle in terms of what to do with those investments.
Okay, that's very insightful, actually. So just to close out on our entire AI topic, right, I'll throw another question for your respective sort of fields and expertise. So for Simon's case, from MyTheo's perspective, how can MyTheo's sort of algorithm-driven approach help investors make better decisions, and as Felix said, in a rapidly evolving market? And from Felix's side, how do you think the strategy would be if an investor came to you to maybe either frequently change their investment strategy, or keep it less frequent? How, maybe share your thoughts about that.
Yeah, so we basically use this approach called functional portfolios. So we have growth, income, and inflation hedge in our omakase is our core portfolio. So how do we allocate the allocation into each functional portfolio is through better understanding of the client's investment objective. So they provide some answer to the question, profiling question. Then from there, we will do the allocation to them. Each functional portfolio, we manage it using algorithms, and is customized according to the objective of the functional portfolios. And this functional portfolio, they are diversified across multiple ETF in different regions, different countries, and also different sectors and orientation. On a monthly basis, we do rebalancing to align back the portfolio according to the client target allocation. And we also have AI tools running behind, monitoring the market data, market sentiment, and react to it, when necessary. And on a regular basis also, we will update the portfolio with the latest data, so that it can basically capture the latest market potential. So for us is that we use ETF, we use algorithms, and we use insight from our fund manager as well to fine-tune the algorithm, to make sure that the algorithm can actually deliver consistent return to investors. So our approach is pretty much a low-risk approach in order to help clients achieve their goal.
Cool. Okay. And Felix?
Well, I don't have such fancy things to share, because for us, as I mentioned, we work with fund managers and we know that they're doing all those fancy things, right?
Yeah.
For us, it's basically managing emotions, managing the financial goals, right? And if a person's, determined, right, they want to set aside X amount and they need it in Y years time, right? So then our role is basically to make sure that we are tracking the performance of those investments. We are mindful of where they are in terms of is it up or is it down, right? If it's down, what does the client need to do? Maybe you need to increase your monthly investments, right? From X to Y, from 100 ringgit. No, nowadays you can't do anything 100. Maybe from 1,000 ringgit, now you have to up it to 2,000 ringgit. Or if you're already going to overshoot, maybe you can go down from 2,000 to 1,000 perhaps, right? And channel that excess somewhere else. So it is really about understanding customers' financial goals, right? How much they want to achieve by when, for what purpose, right? How important is it for them to achieve it? Can they afford to fail, right, in that particular area, right? If not, then how can they continue to remain invested? And really is about holding the customer's hand, giving them the assurance, right? It's a little bit of a coach kind of a role, right? The best tennis player, golf player, name it, right? They would need a coach, right? None of them don't have a coach, right? They would still need a coach. And the reason why you need a coach, because sometimes you just need someone to keep you on the right path, right? And that's where the role of the financial planner comes in to the picture.
So like LeBron James?
Yeah.
You got to throw that one in.
You know that better.
So that was a fantastic discussion. Thank you so much, Simon and Felix, for sharing your expert insights. If you're looking to navigate the AI investing frenzy with confidence, remember, having a diversified, algorithm-driven portfolio can make all the difference. If you enjoyed this episode, make sure you like, comment, share, and maybe share it with a friend who you think might need a little bit more investment clarity. Until next time, invest in the moment and take those small steps towards a better financial future. See you in the next one.